I appreciate everybody taking time out of their busy days to listen to our presentation and discussions today about our newest acquisition, a company called Flexible Engineered Solutions based in the UK. It's an exciting opportunity for Hunting to make this acquisition happen. I'm going to go over briefly some of the strategic reasons for it, and then I'll be joined by Dane Tipton, who heads up our subsea businesses. And then it'll be followed by Bruce Ferguson, who will get into the financial side of it a little bit more, and then I'll close it out. So just as a start today, I just want to say, we're over the moon on this acquisition. If we could go to slide 4. This is a journey that we started late last year. It was one that took a lot of work from both parties. It was a competitive situation. I want to thank Ian Latimer and Rob Anderson, the two principals of the business, for their hard work in helping us push this across the line. These two gentlemen have built an excellent business over the last couple decades. They have an excellent relationship with clients and have proven themselves to be excellent engineers. And those are all areas which Hunting values, and we just thank them for trusting us to be good caretakers for their business going forward. The business itself, the highlights it shows in Ashington in the UK, primarily an assembly and test and manufacturing facility, a testing facility. This company's focus is on fluid transfer products for primarily deep water. There is an application in the wind industry as well that I'll talk about here. We'll talk about a little bit later. But just getting to the basis of why we did this. If you look at the market in the last 8 days, you've seen a $10 swing in the price of crude oil. And when we laid out in our 2030 strategy what we wanted to do, we identified a big area of our future growth focused on the M&A side of the business. And for many of you that have followed me over the last couple of years, every time I've been asked the question, I've stated that the number one priority in that M&A list was more subsea. And the reason we like that is it complements Hunting's expertise in advanced manufacturing and engineering. It complements our customer base around the world. It complements the fact that we are wanting to move more into long cycle businesses rather than short cycle. The oil patch is notorious. There's always going to be cycles up and down, but with break-even costs for deep water projects in the $40 barrel range, this is something that's not going to be interrupted by short-term blips in oil price like some other segments of our industry are. So it's very important for us to build that, and I'll show in another slide how that plays into or has played into our EBITDA performance over the last couple of years. But again, 3 business divisions: fluid handling, subsea, and marine. The biggest business that they have is their main product is something called the diverless bend stiffener connection. I'm going to let Dane go into more detail on that later. But all of these products have a high level of IP to them and customer acceptance that has been into the decades. The acquisition price was 50 million sterling. We closed all that. And like I said, we're now looking forward to the future where we see tremendous upside. If you go to slide 5, that just tells you some more about the strategy and the rationale for this. One of the things we want to be able to do is take this business and bundle it with our existing businesses. A lot of the same customers that we call on, the flexible engineered solutions people, we're calling on the same people. One of the things that we think we bring to the table immediately is more of a global presence to this product line. If you look at the sales strategy that the previous management had, it worked for them, but it was very much based in the UK, not a tremendous amount of sales effort, and a lot of it is they sold on reputation. But what we want to do is to take that and enhance their visibility in places like the Gulf of Mexico, in the Far East, in Brazil, places where Hunting has a presence right now, and where we think there's tremendous upside. There was an article just out today that talked about the FPSO market hitting $20 billion by 2030. So it's a growing market, it's a growing area for oil and gas production, and it's one that we're happy to have these assets and be part of. The products manufactured by FES are definitely mission critical. They have, and again, have been tested in severe environments globally. The return portfolio, the attractive return portfolio or profile of this business, there the multiples are listed on what we bought it at, higher multiple than what we're trading as a company. But part of that is we see a rebranding of multiple for Hunting as we get into more of these long play oil field service opportunities. Our balance sheet remains strong, and we'll continue to look at our capital allocation policy and adjust that or come up with decisions of that, and we'll talk more about that in the future weeks ahead. Next slide, on slide 6, just kind of goes through why we're so bullish on this market, shows some base case scenarios for global offshore spending. Again, like I tell everybody, 70% of the earth is covered by water. And these finds, all you have to do is read about the Guyanas of the world and the Surinams and Angolas and all the new areas coming online in Brazil, and you'll see that there's a big upside to this business. The other thing, well, let me go ahead and turn next to the next slide, in slide 7, before I get ahead of myself. So slide 7 shows the change that we've done. If you go back to 22 or even go back to 2019, the bulk of our EBITDA was generated by North America onshore activities. If you look at 24 now, you'll see our OCTG business has done an exceptional job, but you'll see that segment under subsea continuing to show growth. And that's one with the addition of FES that we see that continuing to expand. On the next slide, on page 8, we're going to kind of give you a before and after of where Hunting is in the subsea market right now. You know, we started this journey many years ago when we made an acquisition of a company called National Coupling in Stafford, Texas, and we really hadn't done any other additions to our subsea business until 2019 when we bought the riser technology and business that was previously RTI, and then in 2020, right before COVID, buying Enpro. So this is another addition to that subsea business. And if you go to slide 9, you'll see where the different parts now add into that business. And one of the things that we tried to focus on, talking specifically about the FPSO market, the titanium stress joints that we sell has been great business, huge upside ahead. But there's areas in that marketplace where customers are not going to use a titanium stress joint because of different water depths and different environmental things. For example, they will use umbilicals and or flex pipe to handle the production. And so for us, the purchase of FES allows us literally to play in 100% of the market on FPSOs, whether they want to use rigid titanium or steel riser products or use flexibles. And so for us, again, it's a big upside to a bigger part of the world. I'll remind everybody on the titanium stress joint side, when that is chosen, we are the only ones in the world that make that product. So again, we like to focus on niche products, high margin, high IP, and that's what the acquisition of FES brings to us. And with that, I'm going to turn it over to Dane Tipton.
Beautiful. Thank you, Jim. Good afternoon and good morning to those of you across the pond. I must start with an amazing historical touch point. 1874, Charles Hunting purchased 2 wooden ships and founded Hunting PLC in Newcastle. And now we find ourselves 151 years later, where our next chapter in Newcastle has begun. I'm Dane Tipton, Managing Director of Hunting's Subsea Technologies segment. Next slide. Flexible Engineered Solutions, and I'll refer to them as FES, is a highly respected OEM. The owners have well over 40 years in this space. The company's been around over 25 years. They design, manufacture, and supply the critical technology for 2 key offshore markets. First, the SURF, and that's subsea umbilicals, risers, and flow lines, as well as SDS, which is subsea distribution systems. When we take their proven track record and their expansive product portfolio and combine that with Hunting's diverse subsea platform that we have today, It's simple to recognize that FES complements Hunting's growth strategy and provides us with two key opportunities that Jim just mentioned. First off, our ability to expand our subsea touch points through the existing business and sectors that we operate within. And secondly, to bundle products and services, whether that be with the Stafford business unit, the Spring business unit, or the Impro business unit, and create economies of scale for our customers. Now, in a moment, I'll cover the breadth of the FES product divisions, but briefly, I'd like to spend a little bit of time on their core product line, the IP-protected diverless bend stiffener connector that Jim mentioned, and I'll refer to this as the DBSC. This solution is the critical component, the critical assembly that supports and protects everything going from the floating production facility down to the ocean floor. So think in terms of flexible risers, umbilicals, power cables. And when we look at this market space for FPSOs, Hunting's titanium stress joint has basically a 40% addressable market specific to deepwater rigid risers. With the DBSC added to our product portfolio, Hunting will be open now to 100% of all the deepwater as well as shallow water FPSO opportunities. So as we combine these two product suites, Hunting will be the most recognized supplier of vessel hang-off solutions for both oil and gas as well as floating wind opportunities. In short, FES fits Hunting's 2030 growth strategy. Next slide. Now, as we talk about FES's technical innovation, you'll notice off to the left, there's four key product divisions. First, fluid handling. Now, I've talked a little bit about the DBSCs, but they also engineer and deliver turrets. Now, turrets are the core technology to the inside of an FPSO. This is the technology that allows the FPSO to clock and adjust itself depending on weather patterns while the entire facility stays moored. In addition, we see fluid transfer swivels, hydraulic, electric, fiber optic stab plates. These are all the critical interfaces for positioning as well as connecting from the floating facility all the way down to the subsea infrastructure. If you look at the pictures at the top of the page in the middle, you'll see the DBSCs all lined up in the facility ready for delivery. And then the very top left picture, there's 15 DBCs mounted to the very bottom of a turret right there, just to put things in perspective. Moving on, the next division being subsea, here you find hot stabs, pig launchers, valves, subsea control panels, PLETs. Those are pipeline and termination systems, as well as plumes and UTAs. I'm talking about the core subsea hardware that makes up the building blocks of the subsea distribution system on the ocean floor. The next division, marine services, topside spooling systems, breakaway emergency couplings, seawater intake systems. Think in terms of critical components for two key areas. First, the offloading of product from ship to ship or ship to shore, and the seawater intake systems are the assemblies mounted to the bottom of the facilities where water comes up into the facilities to basically cool or lubricate things such as pumps, motors, mechanical systems. And then ultimately we get to the renewables product division. This is where they've utilized core technology from the top three sections and applied it to new markets. Perfect example of this, not only from an engineering, manufacturing, but delivering, but they have fielded 4 separate projects into floating wind spanning the UK, France, as well as South Korea. So it's obvious to see from this slide, FES has an extremely diverse technical suite of products. Next slide. Now, as we shift from products into the international footprint, as expected with any top-tier OEM, FES has delivered hardware on huge projects within all the major deepwater basins. From the Gulf of Mexico to Guyana, Brazil, North Sea, West Africa, India, and even Southeast Asia. The engineering, manufacturing, and delivering have all been handled out of the UK, but it's very obvious that FES is well known globally with an incredible installed base. Next slide. Supporting this broad global coverage, it's not surprising to see that 85% of their business is from outside the UK. So when we combine their diverse product offering that I just walked through, as well as a customer matrix made up of companies like Seatrim, TFMC, Baker Hughes, Talos, OneSubsea, Subsea 7, you can start to piece together an extremely balanced portfolio that's built on long-term relationships with blue chip customers and focused on large multi-year projects, as Jim mentioned earlier. Again, this supports how FES fits Hunting's growth strategy. Next slide. So as we dive a little deeper into the strategic alignment of FES's blue chip customer base, we find majors, independents, national oil companies, large EPIC contractors, tier 1 OEMs, engineering houses. These are all companies that represent every corner of all the deep water basins around the world, and they have an extremely active development portfolio today. So when we talk about from a customer strategic alignment perspective, Hunting and FES together, the fit truly is seamless. And what I'm referring to is Hunting has built a non-threatening approach to working with the massive epics and the large tier 1 OEMs, which revolves around positioning Hunting right next to the customer as their technology partner. Our goal is to help complement them in the development of their full field development offering. As we bring FES into our Hunting family, the success with their product line, their customer alignment, all of this strengthens our position. Next slide. So as we look at FES's future growth due to the synergies with Hunting, the opportunities are just endless. First, bundling options. In the subsea distribution area, whether it be hydraulic couplings through our Stafford business, flow access modules through our Impro business in Aberdeen, or even in the surf offering, the titanium stress joints through our Spring business. The opportunities for bundling with FES create product suites creates a competitive advantage, not only for Hunting, but as well as our customer. Then Hunting's strong international footprint, the Gulf of Mexico, South America, Southeast Asia. These are areas where we can definitely help FES grow. 151 years, enhanced brand recognition, as well as a recognized technology partner to the major OEMs. And then access to Hunting's engineering and manufacturing global footprint. And then you layer on top the dynamic commercial team across our subsea technology segment, who've proven on previous acquisitions the ability to scale. In simple terms, the addition of FES to our Hunting subsea technologies portfolio isn't just 1 + 1 = 2. It's 1 + 1 = 3 to 4. Next slide. So to round this out, our subsea growth platform, the technology company we are building today is absolutely incredible. Metal seal hydraulic connections, which is core technology, critical applications utilized in every deepwater subsea field. Titanium stress joints and flow access modules. These technologies simplify offshore operations for all of our customers, whether it be operators or epics. And then now we have the DBSC from FES, whose market is in the fastest growing offshore sector, surf, which opens up Hunting's ability to deliver product into all deepwater and shallow water FPSO opportunities. What we have here is 4 companies that are the best at what they do. Together, we leverage the synergies and ultimately scale their growth. FES is an incredible company with an entrepreneurial spirit, and we are just extremely proud to have them as part of our family as we strive towards our 2030 goals. Now I'll turn it over to our Chief Financial Officer, Bruce Ferguson. Thank you.
Thank you, Dane. If we can go to slide 19, please, I'll give you a financial overview of our new acquisition. And I guess one of the key attractions for us was the strong margin profile that we saw with FES. And that reflects the critical parts that they're manufacturing, precision engineering. We're looking at EBITDA margins north of 20%, which is well above what we targeted for a capital markets day that we outlined in September in 23. Again, nice robust order book with 12 million pounds of firm orders on the books. We also have a visibility on the tender pipeline, which we estimate at 100 million with a P50 chance there, and also a runway of over 350 million of tenders that we're actively working on. So good visibility reflecting the strengths of that subsea market as well. The model that FES operate under is attractive in the sense that it's a farmed out outsourced manufacturing, allows it to flex over the various cycles that we see over the years, helps the margin profile going forward. We'll give some details in terms of the recent financial performance and an outlook of how we see things operating in 25 and 26, but good revenue growth over the last 3 years. average EBITDA margin of 23%. And again, working low CapEx, light on the working capital, so very cash generative as well. If we turn to slide 20, it just gives a bit more detail on the income statement. We've got 3 years there in terms of 22, 23, and 24. If you look at the trailing 24 numbers, we've got revenue of 31 million. We've got an adjusted EBITDA of 6.7, which gives us a multiple in deal of around about 7.5. That adjusted EBITDA is over 21%. Looking forward, 25, we're estimating revenues around about 40 million, adjusted EBITDA around 8, and a multiple of around about 6. Looking further ahead to 26, we see that growth continuing up another 10% in revenue into the 40s, 44 million, with an adjusted EBITDA of around about 8.7. So getting that multiple down between the 5 and 6. So again, good financial strength there. That flexible cost model allows us to flex the cost base and still achieve good profitability in all cyclical parts of the market. In terms of the balance sheet on slide 21, it's a pretty straightforward balance sheet. In terms of property, we're going to lease the property from existing owners, pretty light in the working capital. So it's a balance sheet we like, it's straightforward, and it's not capital intensive, which will help us achieve our return on capital metrics as well. And with that, I will hand back to Jim.
Okay, thanks, Bruce. Dane, good job. Slide number 22, we'll talk about just kind of a review of our 2030 strategy. There's 4 points that we have there. One of them is what we talked about today. We want to grow the business through compelling products and technology. And again, when I talked about FES, you know, we are a very picky purchaser. We've had, as I've mentioned in the past to some of our investors, we've had tons of opportunities come across our desk. But in the last couple of years, a lot of them have been lacking international exposure, lacking IP, specifically, for example, too much land exposure, just nothing that really got us too excited. And then this came along, and it again fits into what we're saying in part number 1, but it's really a dynamic business that we see the whole profile hunting changing to be, again, a more offshore focused company. We love our onshore businesses, but following the trend and trying to get the inevitable waves in the business not as rough when you have the long cycle businesses like FES. Number 2, again, we talked about delivering on through acquisition, our goals for 2030 on that. So this ticks another box on that. Margin growth, revenue growth is again one of our focuses. Targeting $2 billion of sales and 15% EBITDA margins or greater by 2030. As Bruce talked about, for FES, the margins are over 20%, and we can continue to see strong margin performance in our subsea businesses. And then the item number 4, the $750 million of cash flow projected, is going to support higher dividends. It's going to support other things that we can look at for allocation of our capital. But the company right now is sitting in a very, very good position, and we're just remain extremely excited about the future. On slide 23, there's a brief topic shown about capital allocation. First and foremost is we want to invest in the business. So we continue to spend money on CapEx internally. As Bruce and I have talked about many times, we're typically spending at our depreciation levels throughout the organization now. We've got good facilities, we've got good infrastructure. So now it's a case of focusing on efficiencies, on making sure our people have the best equipment possible to get the job done. And so we continue to replace old equipment and like modernize facilities just to make sure that we can be on the cutting edge of efficiencies. Our dividend policy, we've continued to want to promote and grow that. We've mentioned 10% a year. It's important to a lot of our shareholders, and we are committed to maintaining and growing that dividend. M&A, the reason why we're here today, one of the issues that we want to do is, again, we laid out a couple of years ago in our strategy. We needed to grow and find other avenues that were going to take us into other markets internationally and bring out more IP. IP is what separates you from the others that you compete against, and it's what gives you a step up when it comes to pricing and being able to generate and demand appropriate margins. And then lastly, additional shareholder distributions are something that we're looking at, and we'll have more comments about that in the next couple of weeks. If you go to slide number, let me see, 23, and I think that's about it. Well, we go to slide number 25. Sorry, I was looking for a summary sheet. But in summary, FES is just a great opportunity for us. As I mentioned, we were picky buyers. It took us a while to get this deal done. This is a little bit more complicated than dealing with, say, a private equity firm or the like, but we were able to push this thing through. Special thanks on my team to Sid Harper and for all the advisors that helped us get this across the finishing line. But we see huge cross-selling opportunities with this. We are typically, as my predecessor said, we're all salespeople, so we're out there trying to make something happen, and nothing starts in our business without making a sale. And we think our organization today is well positioned to grow the FES business and again continue to grow our name in the subsea and offshore market. We like the margin profile of this business. Again, it's mission critical. These things cannot fail. And because of that, you can charge the appropriate price and margin for our customers. And again, with the rest of that, you'll see that our H1 trading update is July 9th. And with that, I think we're going to turn it over to questions for anybody.
Great.
Moderator.
Thank you. And the first question is from Mark Wilson at Jefferies. He has a question on the existing titanium stress joint product. Does HTG sell that to any other customers other than ExxonMobil in Guyana? If yes, can you say who and where? And if not, why not?
So the answer is yes, we do. We sell it to now. The last order that we had was with BP and Enbridge in the Gulf of Mexico. We've had some significantly large orders with TPAO in the Black Sea, and we continue to, there was legacy business with people like LLOG in the Gulf of Mexico. So yeah, I mean, it's one of those things we're continuing to focus on, but far and away, Exxon is our largest customer. Thanks, Mark.
Great, thank you. Next question is from Richard Dawson at Berenberg, and he's got three. So first question, congratulations on the acquisition and thank you for taking my questions. What is the competitive landscape like for FES's key products, such as its diverless bend stiffener connectors?
Okay, I'm gonna let Dane answer that.
Yeah, definitely. Great question, Richard. The primary competitors on the DBSC would be oil states in the Gulf of Mexico. You've got deep sea technologies also, Balmoral Comtech, as well as Coil. But then when you slide over to the turret systems, your competition shifts over into OneSubsea, NOV, SBM, and SOFEC, and then the variety of all the other hardware delivered, the competition is scattered.
Great. The follow-up was, what level of market share does it currently have, and where do you see that growing towards?
Dane, go ahead.
So again, Richard, in terms of market share on their primary product line, the DBSC, they are the blue chip OEM in that space. They own that space. So their market share is well north of 75% and makes a very nice addition to our titanium stress joint.
Great, thank you. And next question, is there any change to your CapEx guidance of 35 million to 40 million for this year, or any planned increase as a result of this deal for 2026?
No change.
Great, thank you. And the next question is from Kieran at Franklin Templeton. Why did revenue decline 30% in 2024 versus 2023 for FES?
Well, Karen, one of the things about this offshore business is I would say is the delivery schedule of products. It can be a choppy business because of just the time. On some things like turrets, the lead time is more than 18 months. On some of the other products, it's typically six to 7 months. So it's mainly a timing issue.
Okay, great. We have no further questions from the webcast, so I'll hand back over to you for any closing remarks.
Okay, well, I want to thank you all for having interest in the call today. Like I said, we're very excited about this new opportunity that we're embracing right now, and we look forward to nurturing it and growing it over the future. It's an exciting time to be hunting. As I mentioned, starting out, we've got ups and downs in this business. The roller coaster in oil prices of the last week is a perfect example of that. But after 151 years, our focus remains on taking care of our people and our clients, and focusing on technology and products that will make us profitable. And so with that, I don't have anything else to say. Bruce, Dane, any other comments?
All good, Jim.
All good, Jim.
Okay. Thank you all for taking time.